Hello, dear traders. Welcome back. Some of my students texted me that they are having complications in identifying the zones, especially when there is no clear uptrend or downtrend in the market. I thought this might be the issue with you. For that purpose, I wanted to further clarify the concepts of high liquidity zones trading. Before I delve deep into this topic, give me thumbs up and subscribe to the channel. Let's start. I chose this pair of Australian dollar and United States dollar AUD USD. The time frame is 4 hours. The 4-hour time frame was chosen because the market was not in a clear uptrend or downtrend, especially at this point. The market is moving between 2 points, the high and the low. So, before I draw any zones and I simplify the concepts, I will clarify one thing, that is the difference between a zone and a level. A level is a specific point or a specific price on the chart, while a zone is an area like this one which is respected many times. Sometimes the market penetrates the zone area deeper with the wicks. Sometimes the zones are respected precisely, and sometimes the market comes closer to the zones. But all these touches will be counted as in the zone area. Zones are like magnets. They attract markets toward themselves. Let's see, this zone was cherry picked, okay? Because I wanted to show you something, how the market is respecting this zone. With this wick, the market has done the damage because wicks do the damages and the bodies tell the story. The body has closed at the level of the zone area. At the second touch, the market precisely just touched the zone area and dropped. And look into the future data, how the zone got respected several times. This one qualifies as the perfect zone area to trade in the market. Let me take you a bit into the past to see if the market has respected this zone or not. Yes, yes. And no matter what, how far I take you, if there is the market around the zone area, this zone would have attracted the market towards itself. And that's it, because these are magnets. How many examples I show you, you will see that the zones attract the price toward themselves. How many examples? Look at this one. Yes. So this was the first one. Now you will be asking me that what you simplified if this was the same thing as you explained in your previous video. Dear folks, that was the first zone. That's the reason that was a bit easy to draw. Now, if we draw a second one, we will be having lots of confusion. Why? Like we will be having lots of the zone areas on the chart. Which one to draw, which one to not. That's the problem. So we will draw a zone which is a bit away from the first zone. Like there must be the difference of 50 to 60 pips in the 4-hour time frames. On the daily time frame, we must have a difference of about 100 pips or above. And in the 1-hour time frame, we will be having the difference. We will prefer to have the difference between two zone areas of more than 30 pips. Like this one is a zone area at this point, but we won't draw it because there is very little difference between these two zones, which is less than 50 zones. And on the 4-hour time frames, we must have the difference more than 50 pips. And we are also having complications to draw the zones on the candlestick chart. Simply, this is the thing which I wanted to explain in this video. Now, simply move to the line chart and pull out the crosshair, start coming lower on the chart to look for the zones. Is this a zone area? Yes, this is a zone area. One, second touch, third touch, fourth, fifth. Now we will look into the future data. Sixth, how many touches we need to consider it a zone which qualifies as the perfect zone. We are having more than 10 touches on it. See, I counted there. Look at this point, the market penetrated the zone a bit deeper. Was the market reacted to this zone precisely, and at this point the market came closer to the zone. All will be considered as the touches or at the zone area. This is the same zone, the market is respecting it from the lower side, from the upward side, from the both sides. Look, so it doesn't matter how far you go into the past data, into the future data. If you are watching a zone, just make sure there we are having at least 3 touches on this zone in every time frame, and the difference between each zone in their daily time frame must be about 100 pips or above. In the 4-hour time frames, we must have the difference between two zones about 60 pips or above, and in the daily early time frame, we must have the difference between two zones equivalent to more than 30 pips. Okay, this was about the AUD USD chart. Now we are having a choppier market at this area. So how we recognize the zone at this point? Let's simply shift to the line chart. I will extend this area to this point, and now I will shift to the line chart. Because on the candlestick charts we were unable to draw a zone, so that's the reason I shifted to the line chart. I pulled out the crosshair to look in between this consolidated shaded rectangle shaded area to identify a zone, starting from the upper portion. No. Yes, this qualify as a zone. Yes, at this point. Why? Now look at the candlestick chart. If we had to draw this zone on the candlestick chart, we wouldn't have drawn this on the candlestick because there is too many fluctuation on the chart. Look at the wicks of the candlesticks, the bodies, and on the line chart it is a bit easy a bit easier to draw these zones. So on the line chart, I will explain it. Again, we are having first, second, third, fourth. These are the touches on the zone area, in the consolidated area where it was creating complications for the traders, for my students to identify the zones. So simply shift to the line chart. Whenever you are having complications, it is difficult for you to identify or recognize the zone, simply move to the line chart and there you will get your answers. Now again we are shifting to the candlestick chart to see if the market has respected the zone in the past or not. Guys, this is some quality content. Believe you me, when I learned this stuff, I got my first breakthrough in trading and my trading improved drastically. Trust me, once you learn this thing, there is no way moving backward. How many touches, guys? How much the market is respecting this zone area, or let's see how this zone area is having the capability of a magnet to attract the price towards itself. How many? Look at this again. At this point the market is penetrating this zone deeper, market is coming closer to the zone. See, so the market also stopped at this point. This was a zone, and it is likely that the market respect this zone and altered the downtrend completely into the uptrend. This is the power of these high liquidity zones. But we simply don't trade these zones when the market just reach out to these areas of high liquidity. We will wait for catalysts. What are catalysts? They are candlesticks. Like if we are looking for a buy entry in the market and the market is near to these zone areas, we will look for powerful bullish candlesticks. When we are looking for sell entries in the market and the price action is approaching these areas, we will look for powerful bearish candlesticks which are forming on these high liquidity zones. Trust me, try these concepts, backtest them, practice them, and you will see how your trading improves drastically. It is like the surgeons who train on the cadavers. They cut the cadavers, the dead bodies which are given to the institutions, the hospitals, the medical colleges, where the doctors and surgeons train to cut every part of that cadavers and before they cut the body of living beings. So you do the same thing, go to the demo. Don't ever put your life capital in jeopardy by trading these concepts directly. Practice them on demo for at least a month and then start trading on live account. This is the USD CAD chart, daily time frame, and the market is a bit choppier here at this point, and it is a bit difficult to identify the zones. So I will simply shift to the line chart. I will pull out the crosshair and start from the upper portion of the chart. Is this a zone area? No. This one? No. No. Is this a zone area? Might be, but not a perfect one. We will come lower. Is this one? No. In this area, we are having two touches. This one also don't qualify as a proper zone because I mentioned we will look for at least 3 touches on the zones. Is this area proper zone? Yes, this could be. That starts on 1, 2, 3, and this is how the market is respecting these zones in the past. This zone was randomly picked to show you if the market is respecting this zone in the past or not. Amazing, amazing stuff. One of the most powerful concepts. Look at this, how precisely the market is respecting these zones. These zones are working as magnets. Look at this, guys. Believe you me, this zone was picked randomly. So this is how you can identify the zones if you are having any complications. Now, if you said that this was a simple concept of support became resistance or flip zones at this point, then I will show you another zone, another example, pulling out the crosshair again and coming lower from the first zone. Okay, is it a zone? No, we will make sure to have a little difference between the first and the second zone. Sorry, I said difference. I mean a little distance between the first and second zone. Is it a zone? No. No. Is it a zone? Yes, it could be. Why? Because we are having first touch at this point where the market penetrated the zone deeper, second one, third one. Now we will see if the market has respected these zones in the past or not. Penetrating the zone deeper, but as I had said in my previous video, that these zones are like bear bellies. Sometimes the market penetrates the zone deeper, sometimes the price action the market come closer to the zone. Look at this example. The market is completely respecting these areas. No matter how far you go into the past, you will see if the market, the price action is around any area of these high liquidity zones. These zones would have attracted the price towards themselves. Look at this, guys. How many examples you need? How many? This is it. So this was all about simplifying the concept of high liquidity zone trading. Till talk to you to the next time. Thank you so much for sticking to the end. Take care.